Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So we got the FOMC minutes that basically summarizes the December meeting, the pivot meeting that we got last year. And some few things to note there as it kind of rattled the markets a little bit. Not much, but we had a little bit of a rally and a sell-off and then rally again. But I'm going to just read a couple of points here just to keep, in mind what was said during the minutes and, a couple of important lines that should be, affecting the markets a little bit more than expected. But let's first go over and then I'll basically explain what I mean. So, the FOMC minutes, some key important lines that was said is that the participants viewed the policy rate as likely near its peak. So that we already know that, they're coming to an end to this rate hike cycle. They also said members generally viewed addition of any to statement as an indication that rates likely near peak. A number of participants highlighted uncertainty around how long restrictive policy would need to be maintained. So again, members coming out talking about, okay, we're done with hiking rates. The question is, how long do we keep these rates higher, right? Or how long do we keep these rates high? For how long do we keep them, at these levels until we start talking about or bringing rates lower, right? So that's what a number of them talked about for about how long should policy be maintained at its current level. Also, it says those participants pointed to downside risks to the economy associated with an overly restrictive stance, right? Being too overly restrictive, you could see possibly some downside risks to the economy, growth slowing down, etc., as we've talked about many times on this channel. Also mentions here participants observed progress on inflation had been uneven across components. Noted core services prices still rising at elevated pace. So they're not done on inflation, right? There's certain areas, like for example services, that continue to be up there. And like we saw in the previous inflation report, we also see housing sector, food component, they're still elevated. They have not won on inflation, even though it's come down, but not to their 2% target. Another thing that they mentioned here, several participants observed that circumstances might warrant keeping policy rate at current level longer than they currently anticipate. So they're basically giving the clue here. Now this line here, I would say, is a little bit different than what was the expectation during December, and especially that rally that we got. What we found out here is, in this line, is that you have participants talking about that, we could see rates higher for some time. Don't think that, again, that March meeting, you might get a rate cut. That may not be true, right? So again, trying to bring the real expectations in the markets, not these fake ones, right? So that was very interesting there. Another line that was said, several participants noted the decline in the use of overnight reverse repo facilities, saw this reflecting portfolio shifts by money market funds. So overall, again, it's minutes. It's not crazily market moving. It has moved the markets a bit, but not like your usual FOMC meetings. But the key takeaway here is that line, like I said, the Fed members and some of them also believe, I forgot to mention, that rate cuts could start more closer to the end of 2024, not early on. So that basically washes out the idea of any rate cuts coming anytime soon. However, the reaction in the stock market and bond market was that both sold off initially on those comments, and then we had the bond market rally and the stock market rally afterwards. So what does that mean? Are the markets calling the FOMC's bluff Are they saying, no, you are actually going to cut rates sooner than expected? Is there something that the bond market sees, that is terrifying them, saying that, no, the Fed's got to do something, otherwise it's not going to be good, right? So we don't know, right? We don't know. Or could it be that, the bond market is saying, hey, this is a policy error, policy mistake, buy bonds because this is going to lead to something worse off, right? So pausing rates for too long, keeping them, right? Just like as some Fed members noted and acknowledged that you could keep rates till, end of 2024, and then until the end of 2024 is when you might see the actual rate cuts. Although the market is saying there's a 10% probability of a rate cut this month and a 70% probability of a rate cut, the first rate cut in March. We'll see what happens, but you just heard it here from the minutes that even after looking at how the market's been performing, looking at, the reaction since FOMC, whatever data points that you may have, since then, you had the time and the chance to kind of clarify things, which I would say they kind of did here in the minutes, and talk about that, hey, this expectation of an early rate cut anytime soon, don't get carried away with it. We don't think so. And basically paving the way for a pause for longer, right? Keeping rates higher for longer. Risks that inflation could creep up. Risks that inflation is not done yet. Haven't reached the 2% target. And if you haven't reached the 2% target, why should you cut, right? So I think the markets are getting a little bit, carried away there in its rally. But in terms of the message from the FOMC, I think it's quite clear that they're pushing back a little bit here, saying that, don't get carried away. We're not cutting anytime soon. We are talking about cuts. We are going to cut, but we want to really be sure that inflation is coming down and it's time to cut, right? And what have we learned in the past? That every time the Fed is late, every time the Fed is wrong, every time the Fed tries to do something, they're always late to the party. We saw that in 2021 when they told us that inflation is transitory and inflation is going to come down, and then eventually admit that they were wrong and had to hike aggressively. What are they going to do now? Probably be late again. They probably already damaged something, right? And they're probably going to be late in terms of cutting or easing. That's my 2 cents. But anyways, so these are the comments that were said in the FOMC minutes. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video. And I'll see you guys around. Cheers. Bye.